Ramesh, thank you so much for joining me. So, there's much to be learned of and about, and much to be said on Charlie Munger. So, where would you like to start? What's maybe the first time you saw him? What did you take away?
I've been following him almost since I was in college. I'd first heard of a company called Berkshire in 77 when I went to America. The price was maybe $75 at that time. And over the years, I've come to realize what an instrumental part Charlie Munger was in the building of Berkshire. And I think the only tribute I can pay him is historian Henry Adams told that a great teacher lives in eternity because you never know where his influence stops. I think Munger's influence on not only investment, but psychology, corporate governance, the China crisis, the Middle Eastern wars is permanent and long lasting. I think his influence will be felt, as the quote said, for many, many generations to come. So he has also been personally a very profound influence on my investing life, Govindraj.
And Ramesh, if you were to pick, I mean, I'd love to obviously go a little deeper into that, but if you were to pick the first thing, maybe chronologically, since I can't think of any other way to approach it, what would be the first thing, let's say, you took away from him, which would in some ways also have contributed to the bedrock of your investing approach?
Well, I think the first thing is Charlie Munger is very clear. The clarity of thinking and the ability to call a spade is truly extraordinary and remarkable. And so many complex issues in the world, global warming, Bitcoin, corporate governance, derivative accountings, which I didn't know much about. I listened to Charlie Munger's view and I realized that was the correct view to have. He had already distilled everything. And as Warren Buffett said, that when you ask him a question, before you finish asking the question, he's already figured out the essence of the problem facing you. So his ability to get to the core of the issue was extraordinary. In terms of my investing career, of course, I was more basic. I wanted to learn the virtues of compounding and how to look at problems. And what Charlie Munger taught us was that if you can't solve a problem linearly, try and solve it algebraically, which is in reverse. The great mathematician Jacobi always used to say, reverse, always reverse. And Munger used to say the same thing. He said, if you can't decide who you want to marry, decide who you don't want to marry. What are the qualities you don't want to look in a spouse? And then find someone exactly the opposite. So you could use that in various situations where you're stuck. So Munger has been a defining influence, not only in my life, Govind, but in the three generations of Damanis. Myself, my son, and even my 6-year-old knows the photograph of Charlie Munger. And I could tell he was very puzzled to hear about his death this morning.
Your 6-year-old grandson, you mean?
Yes, my 6-year-old grandson, Veer. My son, of course, has a statue of Munger for many years in his office. And in fact, one of the firms that he runs, capital firm, is called Lollapalooza Investing, because Munger Tribute had said that all investing is a combination of various factors, be it engineering, psychology, medicine, and compounding. And so he took the name, and we actually have a company called Lollapalooza Capital.
That's interesting. So you talked about elimination, Ramesh. So what's a good illustration of that in, let's say, maybe a stock or a sector you would have purchased where you would have actually arrived at that by eliminating rather than direct selection?
I think the best example I give was after the tech boom in 2000, there was a huge boom I felt in the BPO or the KPO industry, so called, where I felt a lot of the employment would come across. But I was very hard pressed to figure out which companies would participate in it. So I first looked at the broad picture. I said, what is going to be the size of the KPO, BPO market in 10 years? And there were some reports suggesting with $20, $30 billion. Then I tried to figure backward is to which companies can make a run of it. Which company has access to talent, which company has access to processes, which company has access to Western markets. And from there, I directed to the company called Iscar at that time, which ultimately got merged with TCS. I felt that would be a good business to start with. And amazingly enough, the stock did pretty well after that. So I use it informally all the time. If I can't answer a problem linearly, I try and look at it backwards and say, here's the solution now. How do I get back to the elements of the answer for this problem? So that, and of course, the other thing that we owe almost an infinite debt of gratitude to Buffett and Munger is to understand to us compounding and how compounding of anything, whether it's money, whether it's knowledge, or whether it's behavior, or whether it's reading, you do a little bit every day and get a bit smarter. And over a 20, 30-year period is an enormous payoff in doing that. In terms of money, if you compound money every 3 years, in 30 years, your money grows up 1000x. 1000x. Let me repeat that for effort. So that's, I think we learned directly that from Buffett and Munger, that even a man of modest means, modest stock picking abilities, if he remains invested in winning stocks, that compound over 20, 30 years can transform a middle class life into a fairly generous and a rich life, as a matter of fact. And that's thanks to the power of compounding that Warren Buffett and Charlie Munger taught us.
And I'm going to come to that in a moment. You did say and imputed as well that when you go to Omaha, you're in a learning mode. I mean, you're really there to learn, and that's what you've been doing always. But tell me an instance where, let's say, you had a certain preconception or a conception of something. I mean, it could be to do with looking at balance sheet in a certain way, or assessing a management in a certain way, or even a business which you feel was a rock solid business or a sector, and you changed your mind and you had to really work hard to change your mind because of something that they said. Is there any example that comes to mind?
I'm not sure there's a particular example, but Munger always used to say that you get the success you deserve. You have to deserve the success you get. So a lot of times, for example, I missed out on a very big trade. I wasn't ready, or I, didn't act decisively enough. I think the answer that came back to me is perhaps I didn't deserve the success at this point. One of the attributes that Munger taught us, just to give a snapshot of what he did in his life, is that he took $10-20 million he had at the daily commerce journal that he ran, and didn't invest it for 20 years or so till he found the perfect investment after reading a column, put that money in there, and that went up 3 or 4x. And then they gave that money to Lilu, and that he moved up 10x. So he made 10-20x return for that money. That 40 million became ultimately 400 million. So he said great opportunities are very rare, but when they come, you have to back up the truck and buy it. Don't buy it with the thimble, buy with the bucket at that time. I think that's always stuck with me. Of course, that is easier to express as an idea than to do it in reality. That's why he's Munger and I'm Ramesh. But I hope sometime in my career or through my teachings, someone will learn when the opportunity comes to, back up the truck and buy it, because the Indian market also has had tremendous opportunities over the last 30 years.
Right. And I'm sure those opportunities will come. So, when you look at the opportunities that you've seen in India versus, let's say, the kind of opportunities you've seen there, and sometimes novices might ask this question, right? The US market is different, the Indian markets are different, companies operate differently, tariffs operate differently, barriers to trade operate differently. Is that something that you've ever encountered as a question, and how have you answered it to yourself?
I would think that, but I think they've been disproved. For example, one thing is that Indian markets, you can't make that kind of money you can make in Western societies because you're dealing with rupees instead of dollars. But you look back and study the histories of Infosys and Wipro, they've compounded over 30 years at periods, compounding rates greater than 30%, 35%, and dividends also have compounded at a fairly superior rate. So you've had great stock picks in India that have done and built wealth over long periods of time. So that answers that question. The other question we always had is that perhaps the US market is very efficient and you can't make money in the US market. But if you look at the last 10, 20 years, companies like Google, Facebook, Nvidia, they all came from basically small cap stocks to become mega caps over a period of time, including, of course, Amazon. So I think opportunity abounds every day in the market because human nature doesn't change. You move from fear to greed. And I think what Munger and Buffett taught us was that we should take advantage of that, use volatility as a friend. And the only risk is the permanent loss of capital, not the volatility that is inherent in any stock selection.
Right. And you referred, Ramesh, to what I would broadly call geopolitics, because you mentioned the Middle East and so on, and how Munger would look at it. And what's the learning there? Because these are all recent events, and yet they could affect, though they've not really affected this time, but tensions like this or geopolitical tensions, which a lot of people are talking about now as having a play on markets and stock prices. How would he have looked at it, or would he have looked at it more recently?
Sure, Govind. He had surprising views on it. For example, global warming, which is now, the rage of all discussions, how it affects the economy, how you invest ESG. Charlie Munger is on record as saying the concerns about global warming are overblown. That if the temperature goes up by half a degree or 1 degree, human beings will learn to survive and do well even in that kind of environment. Regarding China, there's been a big thing about trade barriers and how China is doing this and that. And Munger is often of the view that we should try and be friends with China. America and China should try and be friends. In fact, he pioneered one of the iconic investments in Berkshire Hathaway in a company called BYD, which is based in China. And the CEO of BYD, he called it the new Thomas Edison. So he was very open-minded about things. On the other hand, he always called accounting treatments that was given to derivatives as sewage. And he said that was an insult to sewage to call them sewage. In matters of, say, bitcoins, He says that they should be banned in matters of active trading. Now in India, we're seeing a huge upsurge in option trading. He calls it the most useless form of activity, and that he wouldn't bother a whit if governments had banned active trading in options and futures. So he had very unconventional views. But if you always listen to him, he was always very rational. One of his big heroes in life was Benjamin Franklin, who was an author, ambassador, poet, scientist. And he always tried to emulate the simplicity of Benjamin Franklin's thinking. And Benjamin Franklin once said, and he followed the principle, that money is not particularly good because the more you have it, the more you want it. And despite his stature as vice chairman of Berkshire Hathaway, he was worth only a modest $2 billion or so compared to Warren Buffett's $100 billion. And he was very anxious to give away also that. So I think there's a lot to learn from the life and legacy. And that legacy will rebound over many, many generations to come, Govind.
Right. And I think the BYD example is a good one because, I mean, it took a long time for that investment to turn around. And who could have, in their wildest dreams, guessed that this Chinese entrepreneur would suddenly become a force when everyone was obviously looking at Elon Musk?
You're right. The other point also paid tribute to Munger, and so would I, is that he moved the thinking. Buffett was in the occupant of this Graham Dodgeville village of value investing, where you buy companies for net cash, no matter what the business was. Munger was the first guy who prodded Buffett in his own way to move to buying a wonderful business at a fair price rather than a fair business at a cheap price. So he pushed the envelope and made Buffett buy Coke and made buy Wells Fargo, the railroads. He said they're great businesses and the cash flow over the years will more than make up for the better price you're paying. So the power of the brands and the power of looking at a good investment was Munger's almost incalculable contribution to Buffett, and Buffett himself has acknowledged that.
Right. You talked about the long-term investing, as in, looking at something for 20, 30 years. And that really is about longevity. And Charlie lived up to 99. Of course, he may not have known that he would live till 99. But in retrospect, it appears that, yes, he could have bought stock at the age of 60 and then, held on till he was 90 and so on. And that is really the sort of the more fundamental question now to you. I mean, it's tough. People don't have that ability to think so long term. And can you train yourself? I mean, to think 20 years and 30 years, because we're all mortal. And how do you bring these two almost disparate forces together? At one level, the mortality, and the other is the absolute power of the market to compound and deliver to you those amazing returns that you've just talked about.
When it comes naturally to it. Either you're born with it or not born with it. I was with the gene that prepared long-term investing, and my career has further enhanced it. And I believe my next generations will also do that. So either you get it or don't get it. Some people want the excitement and they want the trading and the quick profits, and they do that. But they can generate income for themselves, but rarely wealth for themselves. Wealth is generated by not paying the bid and difference every time, not paying the brokerage, not paying the taxes, but by remaining invested in high quality businesses. And sometimes dividends in like Coke, for example, account for almost 35% of the value that has been created by Berkshire's investment in Coke. So I think it's something either you get it or you don't get it. And, obviously Munger had it in spades, and I'm part of the religious cult that believed in Mungerism. So we almost instinctively got it that, great businesses take time. Rome wasn't built in a day. Neither are great businesses. So let's stick around with them.
And that's, I think, the useful answer, to put it mildly. When did you last get to see him, and what was that experience like?
Of course, like most, solid brokers, to Omaha for the Woodstock capitalistic event, as Buffett called it. And at that time, he used to sign autographs for the foreign delegates, which I was one. So I met him for that few seconds in person. Unfortunately, I've not had the pleasure of either interviewing him or meeting him beyond that. But of course, his work lives on as his legacy. And if I may, Govind, before I end, I would like to have this following quote about Charlie Munger. It has been said that for those of us who knew him, of course, we'll miss him. And for those of you who didn't know him, I'm really sorry for your loss.
That's a wonderful and poignant note to end on. Ramesh, thank you so much for joining me.
My pleasure, Govind. R.I.P. Charlie.